Well, it's January 31st, and the first month of 2025 is already gone. Amazing how quick things are happening, and markets are rocking. There's so many things to talk about this week, so many developments between gold making new all-time highs, the Fed pausing and doing exactly what we in Goldilocks wants to see when it comes to interest rates. And man, oh man, the poor tech sector. NVIDIA just got deep-synced by an announcement out of China. I'm sure you've all heard about it. You couldn't miss it this week. So much going on. Let's dig right into it and talk about all the action this week that's affecting our portfolios, as well as what we want to watch for next week. I'm Colby McFadden, Quiver Financial. Let me figure out how to advance my damn slides here, folks. Where is my little toggler? Technology. There you go. All right. So it's January 31st. Gold made a new all-time high. So now what? And more technology. And oil and energy, they pulled back to support, which we were expecting. They had a hell of a run in January, in the start of January. So now what happens? Trump talking about tariffs. Is it good? Is it bad? What happens to oil prices? I'm going to show you some charts about why next week is a really big tell and important to watch for anybody who's in the energy sector like us. And then stocks, they pretty much went nowhere this week. Not much. I mean, big tech had earnings, and a third of the S&P 500's market cap did earnings, and it was a pretty muted response. I'm going to show you some charts, what to watch next week, because are we on the precipice, on the edge of a correction? If so, how should you handle it? We'll talk about that. Interest rates and REITs, boy, the Fed really did what they needed to. Right now, we don't want them to raise rates. We don't want them to lower rates. We just want them to sit in the background like a good child in the back seat on a road trip. Just sit there, Jay Powell, be quiet, keep a low profile, let Goldilocks get what she wants. I'm going to show you again some charts. Next week's going to be another important week for interest rates because we're right at an inflection point that if they go lower, we could see some good things. So here's our 2025 themes. All the Quiver clients should know this by now because we just did our quarterly reviews. And if you've been watching the videos over the last few weeks, you know that for 2025, we'd like to see interest rates, the 10-year Treasury, stay between 4% and 5%. If you're a mortgage rate watcher, that means you want to see interest rates on mortgages stay below 7%. There's a lot of good news and bad news that can happen between 4% and 5%. The reason we're watching this is because if you own interest rate sensitive investments like traded REITs, things like EPR Properties, Annaly, even TLT, which is a Treasury bond fund, you really only want to own these things when interest rates are trending lower or at least going sideways. And they're important for income producing. So we really want to see rates stay in there. So I'm going to update you on that. Stock market, we've been saying since the start of the year, the bull's pretty tired. If you're going to be in the stock market, look for value. If you're just getting involved in the stock market, be careful. We as professionals have hedged some of our bets on Microsoft, Amazon, and Google, as well as ASML. We like those stocks, but we think in the short term, they could see some sell-off. So we just don't want to give back some gains. And this week, what looked really impressive is the action in the utilities sector, even when some bad news came out. So in our stock market exposure, we like, to be exposed to both technology, utilities, and energy for a lot of different reasons this year. Metals have been on a tear for a while, and we've been watching gold and silver particularly, but you should also keep palladium on your radar. But we've been watching gold as it made a new all-time high this week. So we're going to talk about, does that continue next week, and do we get into a parabolic blow off top at top like we've been hypothesizing could happen? So we'll get deep into that in a few minutes. And then oil prices, we said, would break out of a multi-year sideways pattern. I'm going to show you what I mean by that in a chart. This type of breakout typically leads to a longer term trendy move, meaning that if you break out higher, like oil prices recently did, the textbook is, leaning, 60, 70% that this breakout leads to higher prices over the next 1, 2, 3 years, regardless of what anybody says, like drill, baby, drill. If you know anything about the oil business, and I'll get more into it in a second, you'll understand why we can't use U.S. oil in our current refineries. So there's a lot of political rhetoric that can happen, but can it get executed is a different story. Let me get rid of this little distraction here. All right, so let's dig right into the charts because we got a lot of things. I'm going to start with interest rates because our theory has been that we want to stay between this Goldilocks range we've been in for a few years, about almost 2 years. If we can stay in this range, then that means that the economy is going to continue to stay in a good spot. Everybody's going to feel good. If you have interest rate sensitive investments, they should perform well if you can stay in this range. The threat is if you get above 5% and you sustain above 5%, then the wheels could start to come off a few things. What would be the threat to getting us above 5%? Honestly, oil prices, folks. If oil prices get into the $90 range and stay there, I would think we're going to start to see some inflation. So that's why I like in a portfolio to pair some interest rate sensitive stuff with energy, because the one kryptonite for the interest rate sensitive investments like traded REITs and Treasury bonds is if oil prices get too high and cause inflation. So we were watching the 10-year. What I showed you before was a 5-year chart, okay? Now I'm going to show you, oops, I went too far. Now I'm going to show you a 1-year chart of the 10-year Treasury. And you can see that we kind of pivoted here. It's a very busy chart. Sorry, folks. But we pivoted right around 4.75% on the 10-year, exactly where we needed to. The Fed came out this week, said they're going to pause on any more rate cuts or rises. They just said, hey, economy's in a good place. Fed policy's in a good place. With a new administration, we're going to do a little wait and see what happens. What we want to see in the next 2 weeks is we would really love to see the 10-year Treasury get below this 4.5%, this red dotted line. Because if we can get below that line, then this 4.25 becomes kind of the attractive target. And if we can get down to 4.25, then all of a sudden my confidence level in the call that we made in 2022, that this range between 4 and 5%-ish would be a range we stay in for a couple of years. I'm going to really start to do some victory laps around that because we were some of the first people to point that out. And in fact, some people still aren't even pointing it out. So next week, we really want to see us get below this line. And, you could wiggle around. We could bounce back up to 4.75 before breaking that line. That wouldn't be horrible, but I mean, I hate the suspense here. I'd like to see us get lower sooner. What could help do that would be a good stock market correction. So, maybe if the stock market sells off, you get a flight to quality or flight to safety, and that pushes interest rates lower. So we shall see. We had talked about if interest rates do stay in that range, that things like EPR properties and Annaly Capital could be accretive to a portfolio because they'll pay a damn good dividend and they'll have a little tailwind. So EPR, we shared this chart with you. It's been constructive. I didn't update it this week because nothing really happened this week to change. It's still constructive. Annaly, boy, oh boy, oh boy. At the start of the month, we said, boy, we would love to see Annaly get up to, pivot at 18 and get up to 20. Little did I know that it happened this fast. So you can see that Annaly is made its way up to 20, hit our target. I think it pays a dividend today, I'm pretty sure. So I would expect over the next week or two, maybe Annaly comes back off. As you can see, it tends to trade in this channel. So I wouldn't be a buyer here, but I'm very happy that it did this because my thought process is if big money managers, if the big money was thinking that we were going to get the 10-year at 5% or above for a sustained period of time, that's the big risk. if real big money managers were thinking that was going to happen, then I don't think they'd be buying EPR properties or Annaly. They'd be running away from them. So I just that sense of me is interesting to watch, and this next week will be a big tell for us. Metals and energy, boy oh boy. I mean, let's talk about oil first and get into the big story, which is gold. So we've been sharing with people this longer term chart of oil. What we've been sharing is that this type of pattern, I wish I could put my finger in there, but I can't, so I'll use the mouse. So you can see for a few years, we've just been consolidating into this triangle type of pattern. And I've talked about this pattern over years in many different videos. And this pattern, when it finally breaks out, either higher or lower, it tends to be a trendy move. Because think about this. For 2 or 3 years, you've been consolidating sideways, and now a breakout happens. Typically, that move is for another couple years. The rule book is that, let's say 68% of the time, the breakout is going to be in the direction of where it started. You can see here at the bottom of COVID, when oil prices just got obliterated, we started from a lower level and rose. So we've been hypothecating that when we break out of this pattern, we'll get a short squeeze or breakout higher. And we did see that in January. Now what we're watching is after that breakout, because what happens with short squeezes is that first initial pop that you see here. Let me go back. As you can see, I'm having some difficulties with my mouse. When you get this initial pop out that you see above the red line, and it's a short squeeze, it usually will get retraced a certain amount. What we were hoping is we were watching this week if we could stay above 80. That didn't happen. So it looks like oil prices are taking our alternative path, the dotted green line. And now over the next week, what I really want to see is, can we stay above $76, where you see that dotted red line? Because if oil can pivot here and pivot higher from here, then that adds to our long-term case. Hey, see, Barkley likes oil too. All right, so that's what we're going to watch this week is, can oil stay above? It's going to be a big week because Trump is starting his tariffs. He hasn't decided if he's going to include oil within those tariffs. And quite honestly, folks, if he does or doesn't, I don't know really what that results. You would think it would be negative. However, markets are funny. Most of the time, they do the opposite of what you think they're going to do. So this next week is going to be very interesting. And honestly, I'm kind of biting my nails and watching it with very bated breath. The big story is really, backwards a little bit. You know, obviously, as oil has come in, we did see the energy sector pull back. Same thing next week. We want to see the XLE stay above 88. If it does, then the pattern is very constructive. So more to come on that. So we've had gold on our radar for quite a while. And one of the things that we've been watching in gold is, would it break out above that resistance level now that support has held? And this week, we're starting to break out. So here we were last week, and here we are this week. So not a huge move, but boy, was it constructive, because, and next week, what I'm expecting, realize with resistance, you tend to contend with it. You come up, you hit it, you bounce around it for a while, then you break out. So I wouldn't be totally shocked that over the next week or two, maybe gold and silver have to pull back a little bit before moving forward. It's either going to be that, or they're just going to springboard higher. So this could be very exciting to watch. It's something that we've been watching for and talking about. So it's nice to see it happen in the first quarter of this year. So stay tuned. Also, I mentioned along with gold, what's been happening is one to keep on your radar is palladium. Nobody talks about it, but pattern looks constructive. Maybe I'll share that chart next week with you and talk a little bit more of how it's used in industrial uses. Some useless knowledge for y'all. So let's wrap it up with the story on equities, because that's what everybody talks about, is what's going on in equities in the stock market. And this week was actually kind of disappointing, because you had almost one third of the S&P 500 from a market cap's perspective report earnings. So why that's important is because we're pretty late in this bull phase. I've been showing this 5-wave pattern since the bottom of 2008, 2009 timeframe. For anybody who follows Elliott wave analysis, when you get towards the end of the 5th wave, you should be expecting either a market correction or even maybe worse, a bear market. Right now, we're kind of within that range that we should be aware of it. Doesn't mean you start betting on it yet because the momentum of the market is still higher. But what I do in these situations is when I know I'm kind of getting to the end of the road, just like on the freeway, if you know you're coming to your off ramp, you start looking, how do I get over? So that's what we've been doing in equities is we've been saying, okay, now let's watch this on a weekly basis because everybody's in. Last year we showed with you that, all the small investors, everybody has jumped in. Everybody over the last few months has decided they want to be in the stock market. And if your goal is to buy low and sell high, you don't buy a whole ton when everybody else is, right? So the big theory is be greedy when everybody else is fearful and be fearful when everybody else is greedy. So I ask you, if you're a stock market investor, especially and more so if you're a new stock market investor, or if you're retiring and you need use of your money within the next 5 years, with what I'm sharing, should you be greedy or should you be fearful? That's the question you should ask yourself. What I'm doing for our clients is I'm now watching this market on a week-by-week basis. Earlier in the month, we had said, hey, 5,800 level, we stay above it. Bulls got the ball, no need to be concerned. Below 5,800, we could get into correction territory. And if you got cash, you might want to keep it handy for a buying opportunity. I had said then in the middle of January that as the market progressed later in the month, we'd tighten up some of these numbers. And so now what I've done is I've moved our warning zone a little bit higher. So what I'm watching right now this week and this particular day, Friday being the last of this week, we closed on the S&P 500 kind of right on our line of So next week, what I'm watching is, can we stay above that 6,000 level? That's really kind of the line in the sand for us. If market can stay above 6,000 on the S&P 500, the bulls still have the ball. We start to get below that, and you open up the opportunity for a bigger correction. Do you realize, as I mentioned earlier, the S&P 500 had a big reporting week. So if this is the reaction when you get a lot of stocks like Apple, Microsoft, Meta, Facebook, Tesla reporting, then it raises a little concern about what we should see next week. So very exciting to watch. So to wrap all this up, folks, what we're really watching here is, interest rates staying between 4 and 5%. Gold, we want to see keep breaking out. Oil, we'd love to see it now stay somewhere between $70 to $90 a barrel. That'll be kind of the sweet zone. Above 90 threatens the economy. Below 70, a lot of our stocks like Exxon, Chevron will, their earnings don't look as great. So those are the things that we're watching. Next week, really, really crucial week. So if you've been watching this for a while, I really encourage you to watch next week's update, because I think over the next 7 to 10 days, we could see some patterns really support some of our thesis for 2025. So until next week, folks, take care. Have a great start to February. It is the Valentine month, so love you.